Welcome, curious minds, to another deep dive. Today, we're really pulling back the curtain on Bansal Wire Industries Ltd. We've been poring over their latest financial results, board meeting outcomes, investor presentations. Basically, we've got the insider track on a pretty significant player in the steel wire industry. Our mission for you, our dedicated listener, is to, well, untangle this complex story. We'll cut through the jargon, try to extract the most impactful insights so you can quickly grasp what's truly driving Bansal Wire Industries' first quarter for the financial year 2026. Get ready to understand not just the numbers, but the strategy behind them.
And what's quite compelling about Bansal Wire, I think, is that they're not just, reporting quarterly figures. They're actually laying out a meticulous blueprint for their future. And it seems very much aligned with India's, well, booming infrastructure and manufacturing growth. We'll be connecting their strong performance to these ambitious plans, showing you the bigger picture here.
All right, sounds good. Let's dive straight into those Q1 FY26 headlines then. We're talking about the quarter ending June 30th, 2025. What's the standout news from their consolidated performance?
Right. The headline here is undeniably their impressive net profit surge. It's a remarkable 24.6% jump year on year, hitting about $393 million. And it's not just profit. Revenue also climbed robustly, up 14.9% year on year to $9,390 million. So this isn't just growth. It's growth that signals, I think, deeper operational strength.
That is a strong start. And here's a crucial point I noticed. Even their EBITDA, that's their core operational profit figure before certain adjustments, it grew by 19.6% to do $745 million. What's maybe even better is that their EBITDA margin and their PAT margin, profit after tax margin, both nudged up slightly by 30 basis points each. Now, for those unfamiliar, a basis point is just 1/100th of a percentage point, so the 0.3% increase. Small, but indicates real efficiency gains, right? So what does this margin improvement tell us about the company's underlying health?
Yeah, it's a clear indicator that their growth isn't just top-line volume, it's actually profitable growth. As their MD and CEO, Mr. Pranav Bansal, highlighted, it seems to reflect the strength of their integrated operations, ongoing product innovation, and a sharp customer focus. We're seeing kind of structural tailwinds at play here, basically. These long-term economic forces like India's infrastructure boom and rising manufacturing demand, they're pushing demand in their favor. It really places them in a very advantageous position within the industry, you could say.
Makes sense. Now, beyond the impressive financials, the board was busy on July 21, 2025. They approved these unaudited results, sure, but they also made some notable strategic appointments. What's the significance there, beyond just, standard compliance?
Well, the appointments themselves are, I think, a strong signal of robust internal governance. It's quite interesting. They've brought in Messrs. Ranjit Tripathi and Associates as secretarial auditors for 5 whole years, running through FY 2029-30. Alongside them, Ms. Rashish and Associates as cost auditors and Ms. S. N. Garg & Co. as internal auditors, both for this coming fiscal year, FY 2025-26. This isn't just checking boxes, it suggests a commitment to long-term accountability and transparency. That's essential for a company that's growing and has recently gone public.
Right. And speaking of going public,
Yeah.
they also approved dissolving their IPO committee that was formed way back in August 2023.
Wow.
What's the symbolic weight of dissolving that committee now? And maybe remind us, what was the ultimate impact of that IPO?
Dissolving the IPO committee.
Yeah.
Yeah, that's a significant pivot. It signals a definitive move past that intense IPO phase, if you will. They're settling into their stride as a regularly listed operational business. The IPO itself, which saw them list on the NSE and BSE on July 10th, 2024, was, well, a massive success. They raised $450 million. That was by issuing over 29 million equity shares at 256 each.
Wow.
Crucially, the funds weren't just for, general purposes. They were strategically used to repay borrowings, fund working capital.
Cleaning up the balance sheet, essentially.
Exactly. And they even efficiently reallocated a surplus from the issue expenses back into general corporate purposes. This reflects some shrewd financial management post-listing, I'd say. Sets them up for a stronger balance sheet going forward.
Okay, so we've covered the impressive top-line numbers, the strategic governance moves, but what about the underlying financial stability? How do these results translate when we dig into the balance sheet and cash flow?
Yeah, a critical point here revolves around their financial leverage, and it's a story of really significant improvement. Their debt-to-EBITDA ratio, which tells you how many years of that core profit it would take to pay off their gross debt, it dropped from 4.56 in FY24 down to a much healthier 2.19 in FY25.
Big drop.
Huge. And similarly, their debt-to-equity ratio, showing how much debt they're using compared to shareholder equity, drastically improved from 1.48 in FY24 to just 0.48 in FY25.
It's a very significant improvement. It's almost
Yes.
like they've shed a heavy weight. What kind of impact does this dramatic reduction in debt have, say, on their strategic flexibility or maybe their ability to weather future economic
Oh,
shifts?
it has a profound impact. Absolutely.
Yeah.
This debt reduction directly boosts their interest coverage ratio. That measures their ability to pay interest expenses from their operating earnings, right? It surged to 6.56 in FY25 from 4.82 in FY24. That reflects a very robust cash flow position that can easily cover their obligations. Much more comfortable. Furthermore, the return on capital employed, ROCE, was an impressive 18.92% in FY25, and return on equity, ROE, was 16.92%. So for you, the listener, what this means is that for every dollar they've invested in their business and every dollar shareholders have put in, they're generating nearly 19% back in profit.
That's a serious return on investment.
It really is. Demonstrates strong capital efficiency, strong profitability. And this is all supported by a strong positive cash flow from operating activities, which reached 975.3 million in just this first quarter, Q1 FY26.
Okay, so Bansal Wire Industries has definitely strengthened its financial position. Now
Right.
let's pivot. Let's look at their ambitious future. The MD and CEO mentioned these ambitious plans. How are they leveraging this strong market position to drive future growth? What's the plan?
Right. Zooming out to the broader strategy, Bansal Wire Industries is making some very calculated moves into these high growth, high value specialty wire segments. Think things like steel tire cord, hose wire, bead wire, important stuff. They've even launched a pilot project already with a 20,000-ton capacity for these products, explicitly targeting India's import substitution drive.
Ah, import substitution. That's key.
Exactly. Imagine they aim to be the sole Indian manufacturer for hose wire, for instance, and their bead wire project alone is targeting a 30,000 tons per annum capacity, which is addressing a huge domestic market, something like 450,000 tons annually. So this isn't just, diversification for diversification's sake. It's a strategic national play.
That sounds like a significant and, well, timely diversification into what sound like pretty critical components for manufacturing. But they're also talking about substantial backward integration and sustainability, aren't they? That's where things get really fascinating, I think.
Absolutely. That's a huge part of the long-term picture. Their roadmap includes this massive backward integrated steel and stainless steel wire facility down in Sanand, Gujarat. This is a greenfield project, meaning they're building it entirely new from scratch.
Right.
It involves an estimated investment of about 650 crore by a wholly owned subsidiary, big investment. It's set to feature a proposed 1.8 lakh ton steel plant and a 60,000 ton stainless steel wire facility. It's planned for completion by September 2027, and this move is all about securing their raw material supply and, crucially, improving cost efficiency. Gives them much more control over the entire value chain.
And when we talk about this new venture, this Sanad facility, what about the sustainability aspect? You mentioned it. Are they just sort of talking the talk, or is there a genuine commitment here in the plans?
That's a critical question, isn't it, about corporate responsibility? And the sources really indicate a deep commitment. In line with their sustainability goals, the Sanand facility is designed to incorporate truly environmentally responsible features. We're talking solar power generation on site, advanced rainwater harvesting systems, and really innovative acid-free processing technologies.
Acid-free. How does that work?
Well, for example, they plan to use things like sand belts for tire cord processing and descalers in the pickling process. This could apparently reduce acid use by as much as 90%.
Wow, 90%. That's huge.
It is, and this reflects a broader commitment to ESG principles across their operations. They also mention energy-efficient machines, a zero liquid discharge system at their plants. So yeah, it seems they're not just growing, they're trying to grow responsibly with a clear long-term environmental vision.
Okay, so we've taken quite a deep dive into Bansal Wire Industries Limited's latest results and their strategic vision. From that impressive profit growth and the strengthened financial position to their big bets on high-value specialty wires and this new, sustainable, backward integrated facility in Sanand, it's clear they're not just manufacturing steel wire. They're, well, strategically building for the future, literally building in this case.
Indeed. They've demonstrated, I think, really robust operational performance and a significantly strengthened financial position, no doubt about that. Their focused strategy on these high-value products, plus the substantial investments in both sustainability and integration, It strongly suggests a very calculated move to solidify their market leadership, especially, within India's accelerating manufacturing landscape. The timing seems right.
So what does this all mean for you, the learner, looking at the bigger picture here? Maybe consider how a company's meticulous financial disclosures, all those numbers we talked about, when you combine them with ambitious, forward-looking strategic plans and a clear commitment to ESG, how that can paint a really complete picture of its resilience and future potential. It goes beyond just the quarterly numbers. It's about understanding that underlying strategic narrative. So here's something to think about. What other seemingly traditional industries might be poised for this kind of comprehensive, integrated transformation? Leveraging both financial strength and sustainable innovation. Something to mull over until our next deep dive.